Yeah, so today I'm going to talk to you about how a mistake ended up costing me, I think, just over 62k. But also, I'm going to introduce a new playlist that I'm going to create on YouTube dedicated to losses and learnings. Personally, I don't think that enough creators out there actually talk about the losses or the mistakes or any sort of learnings really beyond winning trades. And I want to be a little bit different, just be a bit real. With a strategy like mine, you're going to get more losses than you get wins. You know, the win rate is anywhere between 25 and 45%, depending on how you take your entries and where you take your profits. And I'm going to take you through probably the biggest mistake in my trading career to date. Highly frustrating, but it doesn't matter. We go again. Let's get stuck in. Right, before we get started, I need to contextualize what has happened and why. I'm not that frustrated about it anymore, but I certainly was at the time and for about a week. The reason why I'm sharing this is I just want to really drill home a couple of prime examples as to what makes somebody an excellent trader compared to just a good trader. And I tripped up over myself, essentially. So I'm going to show you guys something just for context here. Within Discord, okay, so this is my Discord channel, and I use something called chart updates. So every day I'll put out a couple of videos where it's just essentially these are updates on the charts. Essentially they're kind of like signals, but it's really just to show people what direction the market's going in, where we currently are, where I'm looking to get involved next, and it's just to keep everybody on the same page and hunting in the same direction. So it brings us back to the 3rd of March. Now, for the active traders, you'll know what happened on the 3rd of March. It was the start of probably the best week in Forex in about 16 years, which is phenomenal in terms of distance of where price had gone. Now, on a Sunday night, what I do is I do a group call to everybody in Discord where it's a big chart markup. We analyze what had happened the previous week. It's an open Q&A, so any questions about how to trade, the trading types, etc., we go through it all there. And we marked up the charts for the week of the 3rd of March. But when it came around to the morning, I posted one of my chart updates. So we'd waited on the group call for the market to open. At the time, I want to say it was 9 o'clock. Anyway, I'd waited for the market to open and there was an order block which I was quite happy to take if price was to have left it overnight during Asia. Now, what I'm going to show you is a combination of the confluences which I tend to use and what we tend to use in FTR. They go a little bit beyond the basics of the strategy, but it really comes to you with a fair bit of experience in trading. So for some of you who understand things like the Asian range and liquidity and bits and pieces like that and opening gaps, this will help you understand the reasoning behind my decision to take this trade. Let's just get stuck into it. I'm just going to show you on here. This was the video which I'd sent out to the guys in the group, and I'm just going to pause it there. There was an opening gap which had happened right here. Okay, so this was the Sunday night open and price came up. We ended up getting an imbalance and a sort of like a press down. So I was quite happy to take that as an order block. Everybody was assuming, including myself to an extent, that we might have a closure of this gap. So a weekend gap, they don't always refill. And I know that for a certainty. It's about a 70% chance that they're going to get refilled. Now, the way which I used to trade Asia was I used to trade the breakout and the fake out for the London session. So I'm actually going to be releasing another video on that pretty soon, which is essentially once you get into the trade, it's set and forget and it's done every morning. So if you haven't subscribed, do so, because that is just a dead easy strategy that anybody can do. It's really simple. So anyway, moving on to this, I was explaining in this video, I'm just going to play it a little bit. So hopefully, yeah, there we go. I'm demonstrating what I'm expecting to happen. So I was thinking price was going to break down, push up and then come down, or come down, grab the liquidity and off we go. But there was always the possibility, what we'd spoken about in the video the previous night, that price was just going to shoot off into the distance, okay? As part of the Asian fake out, okay, essentially what happens, I'm going to draw this on my actual charts in a moment, but price will just peak out of the end of especially a Sunday night Asian open. Okay, so it's not quite Asian session, it's spread hours, but price will sometimes just poke out and then pop itself back into the range. And if it does that and leaves behind a pin bar shaped a little bit like this blue candle down here, I'd be all over it. So that then takes me on to one of the things that you absolutely should not do as a professional trader, and it is purely panic based on what somebody else has said. I had laid out this information within the group and I was really happy about that. But I'm just going to find the part in Discord where somebody rattled me, and it made sense. It made absolute sense, their comments. So it's not their fault. It's my fault for not doing what you're meant to do, because essentially it explains where the big issue came. So I found the section on here where I had posted the trade updates for everybody and said, this is the order block which I'm looking for. Now, I was literally placing the trade, seeing that the market had jumped out and stood out at me, but this panicked me. Thanks for the update, Paul, but it's one of these cases where IC Markets M15 chart looks different compared to all the other data feeds. All the other feeds don't have that order block for a potential long. So I then started to panic and looked across all the other data feeds. So the other broker that I use is Fusion Markets. They're excellent. They didn't have it. I looked across Oanda. I looked at the FTMO account. I looked at Pepperstone. I looked at Blueberry. I looked at pretty much every broker there, and there were no order blocks in the place. It basically just showed a straight line. So if we look at this chart, this was a chart from one of the traders in the group. And as you can see, there is no break there. This was the gap over the weekend, and essentially there's no order block. With my chart, it showed that there was an order block here and then another push up. Okay, I think it was these candles here. So we're just going to jump into charts, and I'm going to show you what happened, because it's frustrating. So this is the chart of the trade, which I'd called out. And essentially what we had marked up was we had price, we had a local high there, we had a low here, and then price had jumped up. And I had seen that this had formed, and I'd let people know that I was looking to take a long out of here. Now, this was the Asian session, all right? So we're looking at IC Markets feed, which is the primary broker which I use, because their spreads are super thin, their commissions are low. And I've got a link below. If you're outside of the US, I would recommend it. But essentially, I knew that price was working its way down. There was a potential for us to close this gap down here. But if I was to get a break and a close back in the range, I was happy to take that as part of my London fake out. It's essentially a break of Asia. With this, it was a break of the spread hours candle. Now, if we go across to Oanda, there is no pullback like what I've got. So we look at mine again, and then we look at Oanda, and then you could do this with all the other charts as well. And I just thought, oh my God, there's a discrepancy in the data. Like, we had this happen back in January 2024, and it caused me to change the strategy, how we trade boss and chop. To be fair, it's become way more accurate and far better risk reward ratio. But I thought, oh shit, we're going to have to do this again. Problem is that, if I drop down to the bar replay, we had the perfect entry. Okay, so the way which I've been entering my trades is I will, I'll mark out the area which is highlighted here, and I will wait on the 1 minute for a confirmation candle. And this is a primary bull rejection. Okay, so it is a pin bar candle. It essentially shows, because of the wick, we've swept the lows of the previous candles, we swept the lows of this area, we've closed back in the range with a bullish candle. Okay, so my trade just enters, usually using forgotten what it's called, magic keys. So it is pretty accurate. You get in right on the end, and your stop loss is immediately at the end of the candle which it's forming on. Now, a lot of people will say that that's really aggressive and it's not sustainable, but pretty fucking good for me. Anyway, this was the trade. Now, I explained to the guys on the call the evening before, so going back to the Sunday evening, that I used to trade going back 2 or 3 years ago. You'll be able to see from some of my back testing videos. I'll link one, I know, on the screen somewhere, that side, where I used to, one, scale into positions really quite aggressively, and two, I used to wait for the market to take me out of the trades. So I would essentially move my stop loss with the market behind, not necessarily the nearest swing, but the second nearest swing. Okay, so I'd say to everybody, right, I'm determined to get a beast of a move today. We weren't expecting the market to shoot up the way that it did, by the way, and I'm going to show you that in a second. I thought that if I just follow behind the swing of the market, I'm going to be taken out at chalk and I can get involved in the reverse trade. But I'm going to maximize as far as the market will allow me to go. Now, that creates a pretty good segue into the actual purpose of this video, and something that I haven't really mentioned until now. The main part of trading is to have trust in your own analysis and in your own data. Now, what I mean by that is your own data is the backtesting that you've done, it's the forward testing, it's the experience that you've got, and it's also to try to shut out the noise. Now, I know that a lot of people will, they'll look to forums, they'll look to signals, they'll look to news events and stuff to try and get, essentially secondhand information or a second opinion on what to do. And that's absolutely fine. Like, I still do it as well, like within the group. And, the chap who suggested to me that order block wasn't there, I completely trust his judgment. He's a good trader, along with, several of the other guys in the group. The thing is that I have been using the IC Markets data feed for years, and I know to trust it based on my trading and my results. And what I did during this time, at this sort of moment, was scrambled around and looked at all the other different broker feeds and just panicked and missed this trade. So I'm just going to play this out now and show you exactly what happened. So frustrating beyond belief. And I'll tell you what, I'm actually just going to go up several time frames here just to show you really what happened to the market, because it was just agonizing throughout the week. And there was also an opportunity for a scale in. I think it was around here, but the market hasn't reversed yet from this on the weekly, and it just kept on going. I would have been knocked out around here, so I'll just drop to the 15 and show you where the knockout would have been here. So right towards the end of the week, would have made it to there and probably stopped out just before the end of the week. So if I extend this, you can get a feeling for the level of risk that I was using per trade. And this turned out to be a 140, I thought it was a little bit more, but a 140R move. And bear in mind, there was a scale in opportunity down here. Oh, it's near the start, but it was down there. There were probably a couple more as well. But the whole point of what I'm trying to say is, yes, we call out phenomenal trades, within FTR, but you still need to trust your own analysis. I've had a lot of people come and a lot of people go, and the guys who tend to do the best are the ones who put in the effort into their own training. Now, there's so much mentoring that we can do, so much coaching, which I'm going to start doing soon. There's only so much of that which you can do until you start putting it all into practice. This took me years to master, and I only just stopped adjusting the strategy about a year ago. It's worked since the beginning of time. It's continuing to work now. You don't get entries every single day, but the fact of the matter is, to become the best trader that there is, or to be the best trader that you can be, you have to trust your own analysis. So I hope that you guys have learned a little bit from this lesson, which is essentially, I missed out on this 62.5-ish thousand pound trade because I didn't trust myself right at the start of the week. And this followed a couple of frustrating weeks. But I'm just going to say now as well that trusting your gut and trusting your instinct does pay dividends in the end. Today, we were all working together in the group, and I pulled off a 10R trade. Some of the guys got 6, some of the guys got a little bit more. But, it just goes to show that when you trust your data and you trust your instinct and you trust your experience, things are going to be all right. Hope it's been helpful. Do subscribe, because I'm going to be launching the London breakout revamp, and I'm going to touch on the London fake out as well, which is what this trade was based on. I hope you like the start of this playlist. It's not all pots of gold and rainbows. Sometimes trading sucks. Catch you in a bit.